All right, let's get back to, of course, this China deal, although we're not quite at a deal yet. A lot more to come. The president kept mentioning papering it, or basically dealing with all of the different key points. Joining us now to discuss that, Roger Altman, Evercore founder and senior chairman and a former deputy Treasury secretary. We've also got Jeff Moon, China Moon strategist, founder, and a former assistant U.S. trade representative for China affairs. Roger, let me start with you. You made the trip down here to be with us in person. We always appreciate that.
Thanks for having me.
You and I, we've been talking for some time about what's going on in the boardroom. What are you hearing from companies in terms of how they're thinking about things? How does what we heard from the president just now and what we know at this point change what corporate America is thinking?
Well, I think corporate America is going to have the same reaction that a lot of seasoned observers will have, which is it's encouraging. It's very encouraging, but it's preliminary. And it's essentially a 90-day pause on the ultra-high tariffs in order to negotiate to try to get a permanent tariff reduction framework and other progress. Keep in mind that the biggest problem with China trade, on our end at least, is essentially dumping. That China exports a lot of heavily subsidized products where the costs are essentially borne in large part by the government through state-owned enterprises and financing subsidies and so forth. And in effect, unfairly penetrating European and U.S. markets and other markets with products which, if the costs were objectively set, would be priced at higher levels and wouldn't take as much market share. So that's a tough set of issues to negotiate, but that's the heart of the matter.
Right.
Now, even after this pause, excuse me, the weighted average tariff we estimate is 14%. When Trump took office, it was 3 to 4%. So it's still up a lot.
Yes.
And that will still be a drag. I mean, we all know what tariffs do. As Chairman Powell has said, they raise prices, reduce consumption, raise inflation. So I think the reaction will be positive but watchful.
Right. All right. But we've talked so often about uncertainty, and we've heard it so often from so many of the CEOs that we speak to, both on the record and off the record. Does this erase, to a certain extent, a lot of that so-called uncertainty that was mitigating a company's ability to allocate capital and or think about long-term plans?
Well, I think there's going to be a changed mood, David. A few days ago, it was a mood of caution. Let's wait and see. Let's see how the dust settles. Not in every single case, but in a lot of cases. Now I think there'll be a sense of, wow, this is impressive so far, and let's take a little more optimistic point of view. Whether it unleashes a flood of investment announcements, M&A announcements, I think we have to wait and see. And if I were the decision maker, I'd want to see a little bit more of how this goes. But I think you're going to see a positive reaction. And the markets always have a lot of impact on how decision makers think. You know, decision makers feel good when markets are high, business conditions are good, and their own business is moving up. And so now we have markets having recovered to their pre-inauguration levels. And if the fears over a slowdown prove to be misplaced, and we don't really have a slowdown, and I'm not sure on that, then, you'll have a better environment.
Jeff, specific to the China deal itself, I mean, I'm quoting the president here, just was at the lectern talking about them totally opening up their market. Again, we don't know any details here. There seems to be a lot to come over the next 90 days. Give me your expectations and or whether you think that's a real possibility.
If I had a penny for every time the Chinese say they're going to open their market, I'd be an extremely wealthy man and would retire today. China has been claiming that for 30 or more years. The big picture here is that both countries needed, at this meeting in Geneva, to de-escalate. They needed to start trade negotiations. They needed to remove the trade embargo due to the 145% tariffs that were out there. Those goals were generally achieved, and they were achieved basically because Trump has exhausted his tariff leverage on China by imposing this embargo, and he reduced those reciprocal tariffs. In this context, China got everything it was looking for without having to give anything to Trump that he didn't already have or could have had when he was inaugurated and started this term. they have yet to get to any of the hard questions. And Mr. Altman referred to the overcapacity issue. That's just one of the many industrial policy issues that are out there. We have essentially gone back to a reset to January 19, 2021, Trump's last day in office. At that point, he had negotiated his phase one deal. We were waiting for the purchases to happen. None of them did happen. And now we are back at the table where he started 4 years ago, and we'll see where things go from here.